There has been a shift in the narrative which says that growth stocks have started underperforming while value stocks have started outperforming, at least in the short term, not only across the globe but emerging markets as well as Indian equities are following that template if data is to go by. Now let me just highlight all three parameters one by one, starting off with the global growth versus value story. The S&P 500 has returned about 5.5% in the year so far, while the value stocks have returned as much as 11% and growth has underperformed with a gain of just about 1%. But if you expand the time horizon to 1 year, you can see that the exact reverse has happened. The S&P 500 has delivered about 66%, while value stocks have underperformed with 57% gain, and the growth stocks have delivered as much as 72% gain in the last 1 year. Similar is the template that has been followed by the value stocks in the emerging market space as compared to the growth stocks in the emerging market space. Let me just point out that the value stocks have outperformed their growth peers in the emerging market basket for 5 weeks in a row. But that brings me to the point of how an Indian investor can capitalize on this shift from growth to value. And there are indices that are provided by the National Stock Exchange which measure value versus growth. For instance, you do have a NIFTY Value Index and you also have a NIFTY Growth Index. Now, if you look at the price performance on a YTD basis, value stocks have far outperformed their growth peers. And in the last 1 year also, value has outperformed growth as far as Indian equities are concerned. Now, let me just highlight a few details about the growth and the value indices that are provided by the National Stock Exchange. One is you have the NIFTY Growth Sectors 15 Index, which selects the sectors firstly based on criteria like price to earnings and price to book, and compares it to the NIFTY Index, which again after that selection is made based on the higher EPS that is given to the company with the higher free float market capitalization. These are widely available on the National Stock Exchange website. I would encourage if you can have a look at those, and you will also see that some interesting stocks that are there as part of this particular index. The highest weightage is of course to the financial stocks. You have the likes of ICICI Bank, HDFC Bank, Kotak Mahindra Bank along with HDFC, which have more than 10% weightage on each of these counters. Moving on to the NIFTY50 Value Index. Now this index has about 20 stocks which are based on the criterias like return on capital employed, you have price to earnings multiple, price to book, as well as the dividend yield, which are considered for this particular index. Now the stocks that belong to this particular index are the ones typically which offer more value. So you have a lot of FMCG and IT names featuring in this list. For instance, the top weighted counters are Infosys, TCS, you have HUL and ITC, which also have about 10% to 15% weightage in this particular index. So clearly shows that across the globe there has been a shift in the narrative from the growth to value stocks.